Why would Robinhood build its own blockchain? Seriously, think about that for a second. Robinhood already has millions of users, a successful brokerage, a crypto exchange, a wallet, and more. So why spend years building an entirely new blockchain? Well, according to Robinhood, it's for tokenized stocks, real-world assets, a new form of access to capital markets, 24-hour financial markets, and bringing investing fully on-chain. Yet within days of launching, the chain wasn't being dominated by tokenized stocks. It was being dominated by meme coins, despite being described as, at its core, optimized for tokenized real-world assets, including equities, ETFs, private assets, and other financial instruments. So at first glance, that sounds like a complete failure. Imagine spending years building infrastructure for the future of finance, only for the biggest headlines to be about a cat-themed meme coin. But after spending the last few days researching Robinhood Chain, following the request of one of our community members, looking through on-chain data, reading the documentation, and comparing it to other Layer 2 launches, I actually think something much bigger is happening. Because I don't think Robinhood launched a blockchain. I think that they have actually launched infrastructure. And if I'm right, I believe Robinhood Chain may have just quietly revealed Wall Street's secret playbook for bringing finance on chain. And one thing kept jumping out at me when researching this video. Robinhood is not alone. Coinbase has Base. Kraken has Ink. Sony has Sonium. BlackRock is tokenizing funds. And JPMorgan is building blockchain settlement infrastructure. These aren't crypto companies trying to become banks. They are financial companies building blockchain infrastructure. And that made me ask a completely different question. Maybe Robinhood isn't trying to compete with Ethereum or other Layer 2s at all. Maybe it's trying to own the rails that future financial products run across. Because historically, the companies that own infrastructure often capture enormous amounts of value. Railways, telecommunications, payment networks, cloud computing, even the internet itself. Infrastructure quietly becomes the foundation for what everything else is built upon. And I think that is exactly what Robinhood is trying to build. So what exactly have Robinhood launched? Well, Robinhood Chain isn't just another Layer 1 like Solana. It's an Ethereum Layer 2, built using Arbitrum's technology. As we can see from the documents here, they describe Robinhood Chain as built on proven technology on Arbitrum dedicated blockchains, a modular Layer 2 framework that combines Ethereum security with high throughput and low transaction costs. By operating as an L2 solution, Robinhood Chain offloads transaction processing from ETH mainnet, aiming to achieve faster finality and cost efficiency. Robinhood Chain uses ETH as its native gas token. So what does that actually mean? This means that transactions happen on Robinhood Chain, built upon Arbitrum's technology, but ultimately it settles back upon Ethereum Chain. Practically speaking, this means that using Arbitrum's technology is giving user lower fees and faster transactions. However, it still ultimately settles back on the super secure Ethereum blockchain. But honestly, the technology isn't necessarily the most interesting part. The purpose is. Robinhood themselves say that this chain is designed for tokenized stocks, real-world assets, 24-hour markets, self-custody, programmable finance. This isn't supposed to become another meme coin chain. It's supposed to become the financial infrastructure of the future. Now here's where things get interesting. Robinhood Chain is only a few weeks old, yet the early metrics are already eye-catching. Hundreds of millions of dollars have already moved onto the chain. Hundreds of millions in stablecoins, billions in decentralized exchange volume, hundreds of millions bridged from other ecosystems. In the last 24 hours alone, almost 13% more liquidity has been locked in the chain, equating to roughly 23.5 million. And within the last day, we can already see the effect on Arbitrum and Robinhood Chain gaining millions in bridged liquidity from other chains. And according to multiple reports, there are already hundreds of thousands of active wallets addresses. For a blockchain this young, those are genuinely impressive numbers. But they are also exactly where I think people start to make mistakes, because total value locked, or TVL, doesn't automatically mean adoption. Trading volume doesn't automatically mean genuine demand. Wallet addresses don't automatically mean unique users or wallet addresses. Crypto has become exceptional at producing impressive metrics, often just for the sake of marketing. The much harder question is, why are people actually using Robinhood Chain? Because at this moment in time, the answer is turning out to be something completely different from what Robinhood originally intended. And this is where the story starts to get interesting. Remember, Robinhood didn't build this blockchain for meme coins. They built it for Wall Street, for tokenized stocks, real-world assets, the future of investing. Yet within days, the biggest headlines weren't about any of those things. They were about meme coins. As reported by CoinDesk, Robinhood built a blockchain for tokenized stocks. Meme coins took over. It pulled in 135 million of value in 800,000 addresses since July 1st. Almost none of it was doing what the chain was built for. Robinhood Chain, the blockchain network built by the popular trading app to power tokenized stocks, has become one of the busiest new chains in crypto, but despite it being built around tokenized stocks and other real-world assets, speculative meme coin trading has far become the network's defining use case. A cat-themed token called Cash Cat, named after Robinhood's farmer mascot, before the company rebranded, has surged 2,158% over the past 7 days and has hit 156 million market cap. By comparison, tokenized real-world assets on the chain are worth just 12.81 million, of which 10.68 million is stocks. Now, most of people may immediately look at that and conclude Robinhood's plan has failed. They wanted Wall Street, and instead, they got degens. Hood.fun, sound familiar? To Pump.fun, Solana's meme coin platform? But honestly, I think that conclusion might be completely wrong. Because if meme coins aren't the destination, perhaps they are simply the catalyst for something bigger. Let's think about network effect and move away from crypto for a second. How do you make a brand new network valuable across any industry? You need users, you need developers, and you need liquidity. You need applications, and perhaps most important of all, you need attention, because networks become more valuable as more people use them. Developers will build where the users are, liquidity will follow, applications follow liquidity, and users follow applications. It is a value flywheel. Now let's look at what has happened since Robinhood Chain launched. First of all, the crypto media has started to cover it. Capital has then started to flow onto the chain. Developers have then started to build different applications for it. Analytics platforms are now actively tracking it. And explorers have integrated support. And now people like me are starting to make videos about it. Whether that attention lasts is another question entirely, but the attention itself is undeniably real. Now I want to be crystal clear here. I am not suggesting that Robinhood has launched these meme coins. I've seen absolutely no evidence of that. And I'm not necessarily suggesting that there's some coordinated strategy behind them, albeit it may be a clever strategy, as it is a little bit of a playbook. However, irrespective of that, it does not mean that Robinhood cannot benefit from what is happening. Think about what speculation actually does. It gives traders a real reason to bridge assets onto the network. It creates liquidity. It attracts market makers. It encourages wallets and analytics platforms to support the chain, and it stress tests the infrastructure under real market conditions. And perhaps more importantly, it generates headlines. Every article, every tweet, and every YouTube video, every person opening up the Robinhood Explorer for the first time puts Robinhood Chain in the front of another potential user. In that sense, the meme coins may be acting as a free marketing service for the network. Not because Robinhood created them, but because speculation naturally shines a spotlight on new infrastructure. Of course, that only matters if people stick around. If speculation disappears, and if everybody leaves with it, then all you've really created, like lots of other L2s over the years, is a temporary spike in activity. But even if a small percentage remain, the speculation may have achieved something much bigger. It may have bootstrapped an entirely new financial ecosystem. And this is another reason why I often come back to Base. When Coinbase launched Base, they weren't trying to build the world's biggest meme coin chain. They wanted to bring millions of users on chain. They wanted to expand Ethereum. They wanted to build better financial infrastructure. But what happened? Meme coins exploded. Speculation exploded. Trading volumes exploded. And for a while, that's all that anybody talked about. Yet underneath all of that noise, something else was happening. Developers kept building. Liquidity kept growing. Applications kept launching. And infrastructure kept improving. As a result, today, Base is far more than just meme coins. So maybe Robinhood isn't watching its strategy fail. Maybe it is watching the first stage of ecosystem formation. Now, I am not saying that history has to repeat itself. Robinhood Chain could absolutely lose momentum. The TVL could fall, the hype could disappear. We've seen that happen plenty of times before. But I do think that it's far too early to just dismiss everything that we're seeing as just another meme coin frenzy. Because whether the meme coins survive or not, I don't think they are the real story. I think they're simply drawing attention to something which is much, much bigger. So let's forget about meme coins for a minute, forget about TVL, trading volume, and the headlines. Because I don't think any of these are Robinhood's end goal. I think they're building the infrastructure. Robinhood say it themselves. Robinhood serves nearly 28 million customers across 38 countries and 3 continents, a milestone that reflects our commitment to expanding financial ownership worldwide. We are continuing to create access across borders to quality financial products, making building wealth an easier part of everyday life. Millions of customers, a brokerage, a crypto exchange, a wallet, compliance, distribution, and now a blockchain designed specifically for financial assets. That's not another crypto project. That is vertical integration. Instead of relying entirely on someone else's infrastructure, Robinhood is trying and beginning to own more of the financial stack itself. From the customer to the application to the asset, and now to the settlement layer underneath it all. This is the part that I think people are massively underestimating. Most people hear tokenized stocks and think, well, that's just Apple shares on the blockchain. But actually, it's much, much bigger than that. Today, most investments live inside your broker. You buy them, you hold them, and eventually, you sell them. That's where largely the story ends. But tokenization changes exactly what assets can do. As described here by Chainlink, tokenizing real-world assets involves representing the ownership rights of assets on chain. In this process, a digital representation of the underlying asset is created, enabling on-chain management of the asset's ownership rights and helping bridge the gap between physical and digital assets. It gives you more flexibility in what you can do with these assets: lending, staking, collateral, and more. Imagine owning Apple shares. Now imagine borrowing against those shares without actually selling them. Imagine transferring ownership globally in minutes or seconds instead of days. Imagine using those shares as collateral. And imagine combining them with other applications and financial products through smart contracts. Imagine financial markets that don't close or every weekend. That is the opportunity. The asset stops being static. It starts to become programmable. Now, we're not there yet. There are still major questions around regulation, ownership, custody, voting rights, liquidity, and investor protections. But if tokenization becomes one of the biggest trends in finance over the next decade, the companies building the infrastructure today, and I've said it before, will be extremely well positioned for tomorrow. And this is why Robinhood Chain matters. Not because today's TVL actually proves anything, and certainly not because of a meme coin. It matters because it fits a much bigger pattern. Coinbase has Base, Kraken has Inc., Robinhood has Robinhood Chain, BlackRock is tokenizing funds, and JPMorgan is building blockchain settlement infrastructure. Franklin Templeton has tokenized money market funds. Visa is experimenting with stablecoin settlement. Can you notice something? These companies are not asking whether blockchain matters anymore. That debate is pretty much over. They're asking who owns infrastructure, who has access to the customer, who owns settlement. Because, I keep saying it, the companies that own infrastructure often end up being the most valuable companies in the world. So, has Robinhood Chain won? No, it's too early to say that. Meme coin activity may go, TVL could disappear, developers could move elsewhere. But I also think it'd be a mistake to just dismiss Robinhood Chain as another hype cycle. Because unlike many chains, Robinhood isn't starting with 0 users. It already has millions of customers, distribution, and it already has trust with retail investors. And perhaps, most important of all, it already has a reason for the chain to exist beyond just speculation. That's what makes this launch worth paying attention to. It has felt like a lifetime that myself, among many other blockchain enthusiasts, have been trying to convince Wall Street to adopt blockchain technology. But now, Wall Street is actually building the technology itself. Bitcoin showed us money could live on the blockchain. Ethereum showed us applications could live on the blockchain. Robinhood Chain may be showing us that Wall Street intends to live there too. And if that's true, the biggest winners over the next decade may not be companies simply building better financial products. It may be the companies building the rails for those financial products to run upon. As always, this isn't investment advice. I'm not a financial advisor and you should always do your own research. This is just one of the most interesting trends I've come across recently while researching the future of crypto. As always, if you enjoyed this video, please don't forget to like and subscribe. And I'd love to know what you think. Is Robinhood Chain just going through another hype cycle for an L2? Or is it a sign of things to come with respect to Wall Street's future on chain? Let me know in the comments below.